Well, in addition to all the other asset classes we've been watching today, oil, of course, is also in focus. Right now, it's up about 1.2%. OPEC Plus, they're meeting in Vienna this week, and they, in advance of that, have recommended a further output cut. Here to talk more on the oil and energy markets is Neil Dingman. He's SunTrust Robinson Humphrey's Managing Director of Energy Resource. Neil, it's good to see you.
Thanks for having me.
So the recommended cut that OPEC has come out with is 600,000 barrels to 1 million barrels. In addition to the production cuts that are already in place and have been. Is that enough to make up for the drop in demand that we've seen?
To me, absolutely not. And why I say that, really two things is, one, even with the 1.7 that they previously had, you already had about 1 million barrels of excess capacity on top of that. So to me, the 600 a million basically just takes what was excess already. And now we don't know yet. With the interesting stat that I've seen is that this could be the fourth year only of 40 years that demand actually on an absolute basis could be down. So the point being, if they cut, to me, it's only going to take care of the excess supply we previously had. And then now we don't know about how much other demand is going to be offline now. So to me, I think it's going to have to be more.
What does the coronavirus, I guess, tell you about aggregate demand from an oil standpoint, right? Because there's concern right now about the coronavirus being both a demand and a supply shock, which is different than what everyone had originally assumed was just going to be a supply shock. What are you seeing in the oil markets, and what does that tell you about maybe where we're even headed for the coronavirus? Right.
No, it's a great question, because most of my companies, to your point, haven't looked at the demand side. We haven't had to look at demand side for so long. So to now, at this point, the fourth quarter earnings just got over. We haven't seen a lot of changes in budgets. I think they're going to have to go back to the drawing board and say, okay, how can we deal with this? Because they're being pushed by investors, certainly, to say, you've got to now, even for an energy company, you've got to basically spend within cash flow. That is being driven in. And over, this has very new for my business, one of the first years. But now what's going to have to happen, your point is, we can start, and they've started adjusting for the supply side, but they were just taking demand for granted.
Now that China is kind of turning the corner on this virus and seems to be restarting some of the factories, is that playing positively for oil demand?
It definitely is helping. I mean, because again, but the thought of going back to the same thing over and over today, China was supposed to be, between China, U.S., and India, it's always that sort of the growth where it was going to come from. So it'll certainly help, but to Julie's earliest question, to try to get our hands around this and figure out what demand is going to be and how much is going to, because again, we know some is going to come off. We've seen already the amount of driving that's going to be coming off, not only in China, but in the States. So it will help, but again, to what point, I'm just not sure.
What you talked about, we've just gotten through earnings season for the energy companies, for everybody, but for the energy companies in particular. Did they make any comments about financial preparations that they're making? I mean, we had the big energy debt washout a couple of years ago, right? Could we be poised to see something like that again, especially since we've had that brief seizure and halt of corporate bond issuance? Right. How vulnerable is the energy sector right now?
Well, it's a great question, and number one, it's very, very vulnerable because, to your point, the credit and the equity markets, I don't want to say are completely closed, but if the door's not all the way shut, it's nearly there. So they realize that. So the only other option is basically two things. One, you can try to sell something. The M&A market also is extremely tough out there. So that leaves, you've just got to cut back spending. So again, we've already had the rig count in the U.S. fall over 50% here in the last 12 months. Most of them thought, as they put these fourth quarter plans, it was going to be status quo from 4Q. I think that's what's going to have to switch.
Yeah, we'll have to watch closely. All right, Neil Dingman, thanks for joining us.
Thank you for having me.
SunTrust Robinson Humphreys, appreciate it.